Are you looking for a stock that can turn your small investment into a life-changing fortune without breaking the bank? If yes, then you're in the right place. Because today I've got 3 penny stocks that are currently trading just under $1 right now, but analysts believe they could skyrocket in the coming months. And I know penny stocks are risky and volatile and are not for the faint of heart, but with the right picks, they can also deliver life-changing gains. And these stocks that I'm about to tell you in this video aren't just random stocks. They're backed by real companies making strategic moves to position themselves for explosive growth. Each of these companies not only has strong backing from analysts, but also solid recent financial performance, growing market demand, and promising business strategies that could push their stock prices much higher. Whether it's advancements in AI, groundbreaking developments in biotech, or major turnaround story, these stocks have key catalysts that make them stand out. So if you're serious about finding the next big breakout stock, make sure to watch until the end. And of course, don't forget to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on our list is Professional Diversity Network, Incorporated, trading under the ticker IPDN on Nasdaq. This Chicago-based company, founded in 2003, develops and operates online and in-person networks that provide access to networking, training, educational, and employment opportunities for diverse professionals. They serve various communities, including women, Hispanic Americans, individuals with disabilities, military professionals, and the LGBTQ+ community. The company's goal is to bridge the employment gap for underrepresented individuals by connecting them with organizations that value diversity and inclusion. In today's job market, where companies are increasingly prioritizing diversity, Professional Diversity Network plays a crucial role in facilitating these connections through its job boards, recruitment events, and AI-powered talent acquisition tools. Recently, the company announced a significant capital raise through a securities purchase agreement with a single institutional investor. On November 19th, Professional Diversity Network issued and sold 2.5 million shares of its common stock in a registered direct offering at a purchase price of 80 cents per share. Additionally, the company agreed to issue Series A and Series B common stock purchase warrants for up to an additional 5 million shares. The gross proceeds from these offerings amounted to approximately $2 million, which the company plans to use for general working capital. This capital injection provides the company with greater financial flexibility and signals confidence from institutional investors. The issuance of warrants also allows the company to raise additional capital in the future if needed, without immediately diluting existing shareholders. In terms of financial performance, for the quarter ending September 30th, Professional Diversity Network reported a consolidated net loss from continuing operations of $422,000. While this might seem like a concern, it actually marks a significant improvement compared to the $1.32 million net loss in the same period last year, representing a 68% reduction in net loss. The company's total revenue for the quarter was $1.694 million, a 15.6% decrease from $2.008 million in the prior year. This decline in revenue was mainly attributed to a reduction in demand for contracted software development. However, the key takeaway here is the company's ability to cut costs and improve operational efficiency, leading to a substantially lower net loss. As of the most recent trading data, Professional Diversity Network's stock price remains volatile but is currently trading under for just 44 cents. The company has experienced price fluctuations due to the inherent risks associated with small-cap stocks, but its strategic partnerships and focus on AI-powered recruitment solutions position it well for long-term growth. If the company can capitalize on these trends and continue to expand its partnerships with major employers, it has the potential to see significant upside in the coming months. Next up is Clear One Communications, Incorporated, trading under the ticker symbol CLRO on Nasdaq, a company that specializes in high-quality audio and visual communication solutions. It develops and markets conferencing and collaboration tools that enable seamless communication in corporate boardrooms, educational institutions, healthcare settings, and government offices. The company's product lineup includes beamforming microphone arrays, professional conferencing audio systems, video conferencing solutions, and cloud-based collaboration tools. In a world where remote work and virtual meetings have become the norm, Clear One has positioned itself as a key player in the rapidly growing unified communications and collaboration UC&C market. With businesses increasingly adopting hybrid work models, the demand for advanced audiovisual communication tools is rising, presenting a significant growth opportunity for Clear One. One of the company's notable recent developments is its strategic decision to relocate outsourced manufacturing from China to Singapore. This move was driven by multiple factors, including geopolitical tensions, rising production costs in China, and the need for supply chain diversification. While this transition initially caused disruptions in production, leading to inventory shortages and delayed order fulfillment, Clear One has made considerable progress in stabilizing its manufacturing operations. The Singapore facility is now fully operational, and the company expects improved production efficiency, lower costs, and reduced reliance on a single geographic region. This strategic shift could provide long-term benefits by enhancing supply chain resilience and allowing the company to scale production more effectively. Financially, Clear One has faced short-term challenges due to the manufacturing transition. For the third quarter of 2024, the company reported revenue of $2.5 million, a 42% decrease from $4.9 million in Q3 2023. However, on a positive note, revenue increased by 8.7% sequentially from $2.3 million in Q2 2024, indicating a gradual recovery. The decline in revenue was primarily due to inventory shortages and order fulfillment delays caused by the manufacturing shift. Despite these challenges, demand for Clear One's products remains strong, as evidenced by a growing backlog of orders. The company's gross profit for Q3 2024 was $0.6 million, with a gross profit margin of 24%, down from 33% in the same period last year. The decline in gross margin was largely attributed to higher manufacturing costs and temporary inefficiencies associated with the production transition. However, as Clear One continues to streamline operations in its new facility, gross margins are expected to improve in the coming quarters. Operating expenses for Q3 2024 were $2.8 million, compared to $3.1 million in Q3 2023, reflecting a 9.7% reduction. The company is focused on optimizing its spending while continuing to invest in product innovation. One of its key product advancements is the BMA 360 beamforming microphone array, which has gained industry recognition for its superior audio performance. This innovative product recently won the Utah Innovation Awards in the consumer product category, highlighting Clear One's commitment to technological excellence. As of the most recent trading data, Clear One stock is currently trading at just 51 cents, making it a highly affordable option for investors seeking exposure to the UC&C market. The company's long-term growth potential is tied to the increasing demand for high-quality conferencing solutions, particularly as businesses, schools, and healthcare providers continue to rely on remote and hybrid communication models. With its advanced product portfolio, strategic supply chain adjustments, and a recovering revenue trend, Clear One is well-positioned to regain momentum and potentially see significant stock price appreciation. Adial Pharmaceuticals Incorporated trading under the ticker symbol ADIL on Nasdaq, a clinical-stage biopharmaceutical company focused on developing innovative treatments for addiction and related disorders. Addiction remains one of the most pressing public health challenges worldwide, and existing treatment options have had limited success in addressing this issue effectively. Adial is aiming to revolutionize addiction treatment with its lead investigational drug, AD04, which is being developed to treat alcohol use disorder. Unlike traditional treatments that take a one-size-fits-all approach, AD04 is designed to target a specific genetic subset of patients who are more likely to respond positively to the drug. This personalized medicine approach could significantly improve treatment outcomes and position Adial as a leader in the addiction treatment space. One of Adial's recent milestones is the expansion of its intellectual property portfolio. The company was recently granted a new U.S. patent that broadens the coverage of its genetic-based approach to treating and diagnosing AUD. This patent strengthens Adial's competitive advantage by providing long-term protection for its innovative treatment method. Intellectual property rights are crucial in the pharmaceutical industry, as they create barriers to entry for competitors and enhance the commercial potential of drug candidates. With this new patent, Adial is in a stronger position to advance AD04 toward commercialization while maintaining exclusivity in its target market. If AD04 continues to show strong clinical efficacy, it could become a game-changer in the addiction treatment landscape. On the financial side, Adial reported $3.8 million in gross proceeds from its at-the-market facility in Q3 2024. This additional funding provides the company with the financial resources needed to advance its clinical programs. Research and development expenses increased by approximately $825,000 in the quarter, reflecting continued investment in drug development. As of September 30th, ADL had $5.2 million in cash and cash equivalents. Management believes that this funding will be sufficient to support operating expenses into the second half of 2025. Despite being in the clinical stage, ADL has already begun exploring commercialization strategies for AD04. The company has been in discussions with potential commercial partners to ensure a smooth transition from clinical development to market launch. If AD04 receives regulatory approval, ADL plans to leverage partnerships with pharmaceutical distributors and addiction treatment centers to maximize market penetration. The company is also evaluating opportunities for international expansion, particularly in regions with high rates of alcohol addiction. ADL stock is currently trading at just 77 cents, making a high-risk but potentially high-reward investment. The addiction treatment market represents a multi-billion-dollar opportunity, and if ADL can establish itself as a leader in this space, its stock could see significant appreciation. To wrap things up, investing in penny stocks under $1 carries inherent risks, but the potential for high returns makes them attractive to investors seeking growth opportunities. Each of these companies has unique growth drivers and catalysts that could propel their stock prices higher in the coming months. However, it's important to conduct thorough research, assess your risk tolerance, and stay informed about market developments before making any investment decisions. If you found this analysis helpful, be sure to like this video, subscribe to our channel, and turn on notifications so you never miss an update on the hottest stocks in the market.